Welcome to the Financial Freedom Podcast with your host, Lorna Poole, sharing the secrets to creating wealth, investing, and that all-important money mindset. To find out more and accelerate your journey to financial freedom, head on over to www.lornapoole.com to get started. Welcome, everybody. Welcome to the Financial Freedom Podcast. In creating your financial freedom, what should you ask your advisor so that you don't get screwed over? My expert today is Rassman. He is a CFP, speaker, author, and financial service advisor for successful individuals and families. He began his career at Smith Barney in the financial district of New York in 2008 and is a wealth advisor at Centric Capital Advisors. Will graduated from Wagner College in New York with a BA in economics, a former college hockey player and NCAA golfer who lives in Manhattan Beach, California with his wife. He is an active member of the Financial Planning Association and Toastmasters International. During his free time, he enjoys volunteering with his dog, Gopher. So, Will, great to have you here.
Thank you so much, Lorna. Thanks for having me.
What should I be asking my advisor?
Oh, especially with the market the way that it's going, we'd have to make that list a little bit longer today, I think, probably. But I think the number one thing is do you have a long-term outlook? And I think that's especially important in days like today for a variety of reasons. But one is that it really helps you. It helps you and your advisor be the arbiters of fear and greed. And what I mean by that is when things are going sideways, to not be too fearful, and when things are looking really good, to not get too greedy. And so by asking an advisor if they have a long-term outlook, they should be able to tell you the ways in which that long-term outlook informs their strategies. And there should be an answer in there around staying the course and sticking with it. Because I think that one of the best things that a financial advisor can do, especially in today's type of a climate, is be your stick-to-itiveness coach. And what I mean by that is provide you with an experience that you'll stick with, an experience that is neither too uncomfortable or too comfortable. Because I think a lot of times people get into certain things because they're safe, and then they just get into this kind of set it and forget it kind of mode, and then you don't engage with it, and when you don't engage with it, and then you just kind of let it fall by the wayside, that can be just as bad as getting into something that's too risky. And as advisors and clients alike, the ideal place is that razor's edge between chaos and order. That razor's edge where it's something that feels just uncomfortable enough that you'll stick with it, but not so comfortable that you're just gonna give up because it's too easy. And I think that's the proper way to approach planning, and that's what I outline in my book.
That's interesting. So it sounds like there's sort of a fine line there.
Oh yeah, absolutely. That's in finding that fine line, I think that is where the kind of the onboarding process or getting to know an advisor is so important. I think that's why I think that the title of our podcast right now is so informative, is because the questions that you ask an advisor are just as important as the questions that they ask you. And so we can talk some more about the questions to ask an advisor, but I think it's also important to recognize that an advisor should be asking you questions right from the get-go of your relationship that transcend money in the traditional sense. And what I mean by that is talk about, I call it financial therapy. So every time I bring a client on, we do a 90-minute discovery meeting, wherein we talk about values and goals and interests and relationships and
So what's
process.
their motivation, right?
Sorry, say that again?
So what's their motivation? Like, what's their long-term goal to create this financial freedom? Yeah.
Exactly. Yeah. It's getting down to the, kind of the Simon Sinek finding your why thing. It's getting to figuring out what types of financial baggage people bring from the past into the present. Because by pinpointing these things, then as an advisor, you can create that type of razor's edge experience that someone's going to stick with, because you're informed of their financial inventory per se, right? So if they have things that happened in their childhood that made them so that they look at money as more of safety rather than something that gives you freedom, that's important. Or maybe
they will go about where to invest their money differently, right?
Oh yeah, absolutely. And then in these personality differences, I think are so important to keep in mind, because going back to what we just talked about before, it will inform you, or it will kind of guide the way as to whether or not you stick with the plan or whether you're going to give up on it. And I think that is kind of my major message.
Somebody coming to advisor and, as you say, like the current market, it looks a bit awful at the moment.
Yeah.
Right? And the stickability and all that. I mean, we have to trust our advisor to do that. Yeah,
absolutely. And so one of the things that I say to ask your advisor is, what strategies outside of traditional asset allocation do you have to mitigate risk? Because we've learned over the years that asset allocation is, Harry Markowitz kind of invented, quote unquote, asset allocation back in the 50s. And he didn't do it for the average investor. He did it for endowments. He did it for pension funds. He did it for large pools of money. In a sense, we've been using a model to invest that is a bit outdated and doesn't take into account the fact that we are in a more connected global economy than we were back in 1950.
So give us sort of a kind of a synapse of what an outdated one is to today.
So I believe that if an advisor is sitting you down and saying, okay, let's figure out your risk tolerance, and then based upon your risk tolerance, whether you're conservative or moderately conservative or moderate or moderately aggressive or aggressive, then we're going to put you in some sort of asset allocation mix of stocks and bonds, right? Mm-hmm. So it'll be, let's say, based upon your risk tolerance, it'll be 70% stocks and 30% bonds. And we're going to take that, we're going to put it into the market, and then whatever that gives you, you have to take. It's like that. It's a very passive way of going about it, and it assumes that stocks are uncorrelated to bonds, which we found is not true.
Yeah.
So it's a broken. I believe it's a broken way to invest your money, and I believe it's a very passive way to invest your money. And if passive doesn't work for growing your career or finding a mate or raising your children, why should it work for investing? And I think that we should take a more active approach. And I outline in my book some ways to do that.
Yeah. Active approach as in what exactly?
So what I do is I take your traditional asset allocation strategy, but then I add other strategies to it. So what I believe should happen is that asset allocation should be one strategy, and then you should allocate your dollars to other strategies. So you now have a strategy allocation mix. So maybe you're putting 30% of your money towards asset allocation, and then maybe you're putting 30% of your money towards momentum based strategies, and you're putting 30% of your money towards alternative based strategies. So then you have the momentum. By investing in momentum strategies, you're pretty much saying that you're going to follow the trend, right? So if the stock's going, if the market's going up, you'll find a way to funnel the capital into the strongest areas of the market, as long as those areas are doing well. And if they're not, then you'll hold cash. Right? There's a way that you can do that. And it has to do with measuring momentum and making sure that there's a set of rules in which you're putting money into the market and you're taking money out of it. And it's not based upon gut feelings. It's based upon the set of rules. It's based on the set of facts. And then there's also things like merger arbitrage and credit strategies and things like that are accessible to the everyday investor through money managers and mutual funds that you can go that are using market-based instruments, but are creating other return streams, regardless of what the market does. So, are you familiar with merger arbitrage?
No, man.
So maybe a quick one that we could discuss here is so merger arbitrage is done when a deal is announced. So let's use the example of let's say Johnson and Johnson is buying XYZ chemical, right? So Johnson and Johnson is the acquirer; it's the buyer of the other company.
Yeah.
Right. And XYZ is going to be bought. So when that deal is announced, automatically the price of XYZ goes up and Johnson goes down.
Yeah.
That's just how mergers work, right?
Yeah.
And then what you do is you you short Johnson and Johnson and you long XYZ for that little bit that's left in that deal. And then if the deal goes through, you're going to make money. And if the deal falls through, you're going to lose money. And that has nothing to do with what's going on in the overall markets while that's all is happening. So you transferred market risk to deal risk in a transaction. So, and you can do that over and over again because there's all sorts of M&A stuff happening all the time. It's using market-based instruments to create a return stream that has nothing to do with whether the market goes up or down.
I love that.
And
again, that's really good.
So that's an idea as to how you can mitigate risk outside of traditional asset allocation. That's really what I think people need to do more of.
So what else do I need to ask my advisor?
The other thing that you could ask your advisor is, so wait, we talked about
long-term outlook.
Long-term outlook. We talked about
strategy outside the traditional.
Right, outside of traditional asset allocation. I think the other big one is is how do you help people mitigate the impact of taxes? And so, you could have an entire podcast just on this, but I think that the advisor's answer to that should be succinct, in which the ways that they would offer someone like you ideas to lower their tax responsibility. So it's by maximizing all of the vehicles that we have in order to defer tax, and by creating strategies that help with tax burdens around education, around your income, and around the sale of assets. I think those are the big ones. Also, you can do some creative things with insurance as well. But the important part is that there is an answer that is sufficiently creative for you, because what people or what the overall, I think, the governments would prefer is if you just kind of take things as they are and don't ask too many questions, right? And I think it's important to asking questions. So one of the things that I do with my clients is we'll go through kind of what their cash flow looks like, and then we'll have a line item where it says, what type of taxes are we paying in this year? And we go through those and we say, does it have to be that way? Is there anything that we can do to lower that taxable burden, or is there anything that we can do to punt it down the road, to defer it? And you'd be surprised as to how many, what type of things can come up with a creative advisor that is working alongside your accountant, and also probably a trust and estate lawyer that can really help. And that actually brings me to another question. So probably the fourth question here is, what strategic alliances do you have with other professionals? So an advisor should have a close relationship with 1, 2, or 3 accountants and attorneys and insurance professionals. And those are the things that, we can't be an expert in all things. No. Right? And so being able to bring in the expert around things like, filing your tax returns and creating a trust and helping you with the right amount of life insurance is super important, because today's advisor is the quarterback of your financial household. Think of them as your personal CFO. It's like they need to have everybody in order to help you with all of the things that come up. And so I think that my last question would be kind of that ties all of this together is, do you offer truly personalized services?
What about fees? That's a big topic at the moment.
Sure. So I think that fees are something to take inventory on, but to not spend so much time on it that you're going to kind of spoil the broth, per se. It's like there are nefarious people out there, for sure, right? That said, I think the majority of people are well-meaning, and I would say that is mostly true for my industry. So that said, there's usually a a range of fees that is kind of what's considered acceptable in the industry. If it's somewhere in there and you want to work with that person, it's going to pay for itself 10 times over. So I wouldn't get too bogged down in it. I think that a lot of people, focus on it so much so, and it kind of gets to this pinching pennies type of thing. And that person may have really been able to provide you a lot of value, and you didn't do it because you thought it was, quote unquote, too expensive.
Very topical at the moment with recent books and things like that. That's I'm glad you addressed that. And what do you mean by the personalized service? So
by the personalized experience, I mean that this is kind of like what puts the bow on top of the whole thing, because as I talk about in my book, that we're shifting from a service-based economy to an experience-based economy. And what I mean by that is that there's always going to be services out there that you'll need for kind of like one-off stuff. But the things that you stick with are experiences. And people most likely don't stick with experiences that are not tailored to them. It's like, you go to a theme park and you ride all the same rides as everybody else, and then you leave. Like, you don't stay there, right? The experience, the fact that something is tailored to you. So in my book, I talk about, I think the shoe companies are doing it really nicely about how they're letting you customize, the color of your shoe. You can put your initials on them, and you can pick different patterns. And that is, I think, kind of where we're moving towards, because personalized service is really providing you the experience that you're looking for. So making sure that your advisor has taken the time to get to know every detail of your situation that you're willing to divulge is super important. Because you can't just go to a doctor and say, make me healthy, and without, filling out all of their forms, right? And they ask you about your current lifestyle and your family history, and, they take your temperature and their blood pressure and so on. So would you trust a doctor if you just walked into their office and they looked you up and down and they said, all right, you're healthy, and then they walked away? I mean, there are a variety of measurements that should be made before somebody gives you advice. And I think that's where our industry has gone wrong over the past 20 to 30 years, I think, is that, just walking up to somebody and saying, hey, here's this stock, or here's this annuity. Like, this is the thing for you. It's like, how do you know? You haven't even taken the time to get to know that person. You're selling for selling's sake. I think that by forming the relationship first and then filling the plan with product is a much better way, rather than starting with a product and then forming the relationship later.
Totally agree, Will. Will, this has been an amazing conversation. From everything we've shared, the 5 questions to ask our advisor, somebody who's thinking of approaching one, what's the kind of one thing you want to leave them with?
I would say that I would go back. I would bring all of this full circle and say, find someone that is going to find that portion between not difficult enough and too difficult. It's going to help you find that razor's edge where you're going to stick with it. It's like, it's so common nowadays, I think, I mean, from my experience, what I'm seeing, that people, plan and then they drop it. It's kind of like we're coming up to the whole New Year thing. I mean, people make New Year's resolutions all the time, right? And then the gyms are full of people, in the month of January, and then they get empty again in February. It's like picking someone that will help you stick with the plan is so important, because if you just plan every January and then you forget the plan for February through December, it doesn't do you any good.
You're not going anywhere.
You're wasting your time and your money. Yeah. And that's my message is let's create a plan and let's stick to it. Love
it. Well, how do we find out more about you?
So Google, ever heard of it? No. So my book is coming out in a couple of weeks now. It'll be out after the first of the year. It's called Atlas Shift. There's a website up for it, atlasshift.com. So ATLASSHIFT.com. On there you can pre-order a copy of the book if you feel so inclined. Or I can just give you some more. There's some information on there more about the book. I am on Facebook, Twitter. I almost just said MySpace. That kind of dates me, I think. And then my company that I do comprehensive financial planning with people through is called Centric Capital Advisors. So Centric as in client-centric, CENTRIC. You can find us at centriccapitaladvisors.com. And I'd be happy to if anyone has any questions or wants to continue the conversation, feel free to shoot me a message on any of the platforms or send me an email. I'm pretty accessible. I'd love to be able to help however I can.
Thank you, Will. This has been amazing. And I personally got a lot from it. So thank you for being here.
Thank you, Lorna. Appreciate it.
Hey, everyone. Remember to join us in the Private Financial Freedom Podcast Facebook group with me, your host, Lorna Poole. This is a safe haven of like-minded wealth-getting go-getters who, like you, are on their journey to creating financial freedom in their life. This is where you and I can get intimate. I can give you the support and guidance to go from where you are now to where you want to be, developing your wealth mindset and creating your financial freedom life. Join at www.facebook.com/groups The Financial Freedom Podcast. You will see the links to this on the website. It's in the show notes, or type it into the Facebook group. All you have to type in is Financial Freedom Podcast and you will see us there. Look forward to seeing you in the group. Take care. Thank you for joining us on the Financial Freedom Podcast to creating wealth, investing, and developing your money mindset. To get started today on your journey, head on over to www.lornapoole.com and grab your free course, 5 steps to breaking free from your poverty mindset and accelerating your journey to financial freedom. See you there.